have Mark Matthew of Bank Julius Baer and Co. joining in for some perspective now. Mark, great to have you on as always. Good morning. Thanks for joining in. Let's start right there. This whole hope that we're seeing across Asian markets because of what Mr. Scott Bessent is saying. He's saying a deal with India is probably first off the block and there could be others. But China is puzzling. The US says we're talking. China reiterates again and again through its official channels that there's no conversation. What do you make of it?
I make that both of those are really for domestic politics. I mean, Scott Bessent was saying yesterday that China has to make the first move, and China says that there are no talks and the US has to make the first move. It's for domestic politics. But behind the scenes, there's no doubt that they are talking. And at a certain point, though, we're going to have to see some evidence of that because it's the reason why the market has been going up primarily is the narrative has changed from escalation to de-escalation. At a certain point, we're going to need to see some evidence of that. But I think we will because it just makes no sense for either economy to basically drive themselves off a cliff, which is what they would do if they keep these tariffs in place.
Hi, Mark. Good morning and good to see you again. What about the Indian markets? We have outperformed from Liberation Day, because our markets are high in comparison to the rest of the globe. And the flows have come back as well. But we have our challenges, right? There is a bit of a slowdown in various parts of the economy. We also have earnings that haven't been, blockbuster. And maybe there is a downgrade risk as well to the estimates that we're working with. Your view on the Indian markets post this recent rally?
I think it's fine. I think the market is always looking forward. So it's true that there has been some economic weakness, but if we look forward, I think we will see acceleration because the things that caused that weakness last year are behind us and inflation is back down to very reasonable levels. So we can look forward to at least 2 more rate cuts. And the main thing is that the dollar is still overvalued. And our view is it will weaken over the next 12 months. It's probably about 10 to 15% overvalued, believe it or not, based on our real effective exchange rate model. Now, I don't know if it's going to go down another 10% because it already is down 10%. But if it continues to weaken, of course, that is good news for the Indian market as well, because it would attract foreign flows.
Although 15%, and I've seen some estimates, Mark, morning, 15, 20, 25% downside on the dollar. But that would only come if there's this sharp weakness in US, right? US growth, maybe a recession. Wouldn't it take a recession to trigger another 15% downside on the dollar? What would that mean then for flows, etc., to EMs?
It could be positive. I mean, there are 2 kinds of recessions. There's a very deep structural recession like the global financial crisis, and then it's just risk off everywhere. But then there's a good old-fashioned cyclical recession, and generally what you see in that kind of environment is people trying to find other places to invest in the rest of the world. And India's economy among the major emerging markets is about as decoupled from the US as you can get. I mean, there is the technology sector, but that is not the main driver of the economy. It's domestic consumption. So I think in a cyclical recession scenario, by the way, it's not our forecast, but if it did happen, that would probably be a net positive in terms of flows to India.
All right, Mark, we'll leave it there. We'll, of course, you don't need a serious kind, as you said, right? I mean, because then that is just bad. But some slowdown typically, good for EM flows. So just the right kind of slowdown is what is required to trigger that sort of, higher flows into EMs, etc. Mark, thank you for joining us. As I said, appreciate it. Well,